Welcome to Accounting Principles 1A, an intro to accounting. Before we get started with learning accounting concepts, it is important to understand why you are studying accounting and the purpose accounting plays in businesses. Accounting is the language of business. It provides business owners, managers, investors, and other stakeholders information about how well the business is performing and whether the business is profitable or not, or how much it is growing each year, as well as other pertinent information. We also deal with a degree of accounting in our personal lives, such as determining if we should take out a loan, and how much income is needed to take out that loan, or how interest rates may impact the loan payments, or how interest rates may impact the decision to save money versus invest money. You also perform a degree of accounting when you write out checks from a checking account and then reconcile your checking account. Do note, if you were to start a business, it is critical that you keep business transactions separate than personal transactions. So let's dig in deeper of what accounting is. The accounting process is a means for measuring activity or transactions that occur in a business. This is done through the steps of analyzing, recording, classifying, summarizing, reporting, and interpreting. Let's go through each of these. Analyzing means looking at what happens and how the business was affected. For example, let's say I invest $1,000 into the company. So let's analyze what happens. I took $1,000 of my personal money and deposited it into the business checking account for the business to use. Another example, let's say I purchased $500 of equipment through writing out a check. Again, let's analyze that. I purchased equipment by using cash from my business checking account. It is important to know that in accounting, writing out a check from your checking account is treated as a reduction to cash. The recording step includes putting the information you gained from analyzing into an accounting system. That could be done by either typing into an accounting software or manually writing into an accounting journal, thus tracking what occurred from the analyzing step. The classifying step means grouping the same activities together for the purpose of summarizing a total of what happened per activity. For example, grouping all the purchases I made in the month into one list so then I can see how much purchases I made for that month. To determine the total of purchases, that's the summarizing step, which totals the results from the list. The reporting step includes creating financial statements or reports that display each of the summaries and displaying it in a format that an organization can gain value from. The last step is interpreting. This is taking the information you gained from reporting and learning how the business is performing. It also includes viewing metrics and comparing the reports to prior months, years, or against other companies to again see how the business is performing. So again, to recap, accounting is a language of business, which through the accounting process of analyzing every transaction that occurs in the business, and then recording, classifying, summarizing, reporting, and interpreting, business owners, managers, and other stakeholders can gain insights to how the business is performing, how much cash they have, and how much money they're making, and how much expenses they've had. In the next video, 1B, I discussed the accounting equation, which is the key foundation to accounting and is used for analyzing all transactions.